I don't believe the Fed will increase interest rates this year because the economy is weakening.
Our top story tonight, Mark Farber expects the US Fed to continue to be patient on rate hikes, but global markets are on tenterhooks awaiting Janet Yellen's decision later tonight. Wall Street slumps in early trade. Oil prices continue to tumble.
The US Fed keeps bulls on the edge on the Dalal Street Markets. See some wild swings that end the day with marginal losses. Nifty tumbles below 8,700.
The Aviation Ministry proposes to scrap the 5x20 rule, which prohibits new airlines from flying to overseas destinations but allows only over 6-hour flights, and proposes a credit system to fly to destinations like Southeast Asia and the Middle East. A disappointed AirAsia India says it will focus on the domestic market for now.
Headwinds for the Mines and Minerals Bill, but hope for the Coal Mining Bill. The Select Committee makes changes to the MMDR Bill, proposing a hike in payment to the District Mineral Fund for existing leaseholders. Amount will be equivalent to the royalty amount, but the Coal Bill unchanged. Rajya Sabha to take up both bills for discussion tomorrow.
Infosys whistleblower Jack Palmer testifies before a U.S. Senate Committee on Immigration, accuses Indian companies of misusing the H-1B route, says Indians displacing U.S. workers have minimal skills and little business knowledge.
We are confident that they will just do justice in this case.
A day after Bombay High Court quashed its plea against the government, Financial Technologies gears up for the next legal battle. Company's chairman Venkachari says the government's petition is baseless and frivolous and vows to put a fight at the company law board.
For the first time, the ruling government may have one of its own heading the State Finance Minister's panel on goods and services tax. Sources say Gujarat Finance Minister Saurabh Patel is the frontrunner. FMs of Bengal, Kerala and Punjab are also in the running. That's a CNBC TV 18 exclusive.
The Tata Group's iconic Taj Mansingh Hotel will go under the hammer, but the conglomerate could be working on a plan B. A special report coming up.
On the hour, can the Fadmanist government pave the way to make travelling from Navi Mumbai to South Mumbai easier? Status check on the Trans-Harbour link and the hurdle it faces. Coming up next.
And there is the blow.
Chokers. This 7-letter word has haunted South African cricketers for 2 decades, and today the Proteas took a major step towards shedding that tag. They have thumped Sri Lanka by 9 wickets to book their place in the semi-finals, their first ever victory in a World Cup knockout game. Two Sri Lankan giants, Sangakkara Jayawardene, said goodbye to one-day cricket, unfortunately, after a humiliating defeat. And JP Dumini took the first ever hat-trick of this World Cup. And fingers crossed, India plays Bangladesh tomorrow in the quarterfinals. Shireen, I could go on and on and on, but I know we have a show to do.
Yes, Nantara, I'm very glad that you've decided to stop. Very considerate of you. Good evening. Thanks very much for joining us on India Business Hour. This is not a cricket show. It is about markets and more. And it's a big day for the financial markets across the world, as everyone has their eyes fixed on Janet Yellen besides Nantara. But let's start with the day's trading action. The bulls were on Patient Street on Dalal Street today, but will Janet Yellen spring a surprise ahead of the crucial decision by the US Federal Reserve? Equity markets today saw some pretty wild swings in trade. Mild profit booking took the Nifty below the 8,700 mark. The Sensex also lost about 100 points, slipping further away from the 29,000 mark. The mid-caps managed to hold on to the levels that they've been trading at, with the index ending with marginal gains. Now, the FOMC meeting has also brought in some wariness in the currency market. The rupee ending almost flat at 62.69 ahead of the US Federal Reserve's monetary policy statement. Despite opening slightly stronger against the greenback, the domestic currency was stuck in a tight range of 62.61 to 62.78 to the dollar. But this is the big story. The US Federal Reserve's policy is highly anticipated and will be released at 11:30 p.m., followed by a press conference with Fed Chair Janet Yellen. You can watch the action right here live on CNBC TV 18 starting 11:30. Investors are monitoring whether or not the word patient remains in the text as an indication of when short-term interest rates might go up. CNBC's Steve Leesman tells us what the street is expecting. Steve.
The word is just 8 letters, but there's billions of dollars around the globe riding on it. The Federal Reserve looks set to remove the word patience from its statement, a word it has used to signal that there would be no rate hike for at least 2 meetings. But 69% of respondents to the Fed survey say the U.S. Central Bank will lose patience, the word that is, and pave the way for possible rate hikes in the months ahead. When? Survey respondents dialed ahead their expectation for the Fed's first rate hike in 9 years to August of this year from September. But they see very gentle rate hikes. The Fed funds rate is forecast to be below 2% at the end of 2016 and ratchet up to only 3% at the end of 2017, both low by historical standards. But not everyone thinks the Fed will be quite so easy.
I think the Fed has been slow to act and is a little behind the curve, and as a result, they may end up moving a little faster than what the markets have priced in.
In fact, 54% of respondents to the CNBC survey think the Fed is too easy, that is, behind the curve, the first time that number has been above 50. But complicating the Fed's decision is the likelihood of declining inflation, caused by lower oil prices and a strong dollar, which lowers import prices. That could give the Fed pause from hiking rates too soon, because inflation will remain below its 2% target.
I don't think the Fed's really so much on the verge of raising rates right now. I think they want to. I don't think the data are going to accommodate it.
But the Fed is only clearing the runway for a rate takeoff by removing patience. How quickly rates take flight and how high they soar, well, that's a debate that will begin nanoseconds after the Fed releases its statement. Back to you guys.
All right, Steve, appreciate you joining us. We'll come back to you when the Fed does make an announcement at 11:30. Will she or won't she? Here are some more experts on what the U.S. Federal Reserve's rate hike timeline could be.
I don't believe the Fed will increase interest rates this year because the economy is weakening. Now, there are 2 events which may lead to the Fed increasing rates. Either the economy picks up dramatically, which I do not expect. I think the economy is actually much weaker than the employment figures would suggest. And number 2, because of the strong dollar, the Fed will be very reluctant to increase interest rates at the time you have essentially massive easing in Japan, in Europe, and elsewhere.
Yellen told us last month that they wanted to go back to data dependency, move away from a date, and therefore the language was going to change. So that was a pretty high hurdle. The economy certainly looks pretty weak. My guess is that it's just temporary because the labor market was one of the few indicators. If you look at charts on precipitation and temperatures, actually looked okay in February. Tax receipts still look really good. So I think this is just temporary. It's a pause, and we'll see growth strong next quarter. The Fed looks through it, and the economy will be okay.
So catch all the Fed action live on CNBC TV 18 starting 11:30 p.m. right here. But here's a quick check of the action on Wall Street. Stocks are trading in the red as investors await signals on the timing of a possible rate hike from the Fed. The Dow is down over 0.5%, while the Nasdaq and the S&P 500 are also trading lower. So trepidation there ahead of the Fed decision in the U.S. markets. And across the Atlantic, European markets are trading mixed. The German DAX is marginally lower. The French CAC is flat, and the British FTSE is up by nearly 1%. But it's not just the global financial markets that are watching to see what the U.S. Federal Reserve does next. Regulators and central bankers around the world are also monitoring the Fed commentary. RBI Governor Raghuram Rajan says India is in a much better position to weather any movement on rates. After a meeting with the Finance Minister Arun Jaitley, Rajan said that the Reserve Bank is prepared to deal with any foreign fund outflows resulting from a possible rate hike. He also added that India has significant forex reserves it can fall back on. He also said that while the RBI itself will take cues from the Fed's policy statement, he's not so certain that today's policy statement from the Fed will shed any light on the timing of any rate action in the U.S. So that's the word coming in there from Governor Rajan on the likelihood of the Fed announcing a timeline as far as its interest rate hike cycle is concerned. Neta.
As that's going to be the big trigger for global markets. But let's head back home now. The other big story this evening, the Aviation Ministry has proposed to scrap the 520 rule to enable new airlines to fly overseas. The rule, which basically means that only airlines with 5 years experience and 20 aircraft can fly abroad. Generally, this should be good news for carriers, but there is a catch. New airlines can initially fly only for over 6-hour-long flights, and this rules out places in the Middle East and Southeast Asia. And if they want to fly elsewhere, they have to first gain credit. Sindhu Bhattacharya are joining us with those details. Sindhu, first, what is this credits business? What exactly does it mean? And for the new carriers like Air Asia and Vistara, they can't go back home to Singapore and Malaysia under these rules.
Well, with the new proposal that the ministry put forward in a meeting with airlines today, looks like the existing airlines like Indigo have quite an edge over Vistara. Airlines like Indigo, Jet, Air India, SpiceJet have been vehemently opposed to lifting of the 520 rule. They have always been saying, we suffered under this rule, we were barred for 5 years, we had to build a fleet of 20 aircraft. Why should the new airlines have it any easier? So now that the government is proposing to do away with 520, they have lobbied hard, and it seems the lobbying has worked, because the government now says new airlines can fly abroad, but first they have to abide by a very complicated system of acquiring domestic credits by mounting flights to remote and regional areas, which will anyway delay any overseas flights to 2 to 2.5 years of operations, and then they will not be allowed to mount flights to areas which are within 6 hours of India. So therefore they will not probably be allowed to fly to the Gulf, to Southeast Asian destinations like Singapore and Bangkok, and this is certainly not good news for either Vistara or Air Asia. Also, the existing airlines are unhappy because they have now been told that the domestic credits they have to notch up to be able to mount extra flights to overseas destinations is also getting more complicated. So in a sense, both the domestic, both the existing and the international and the new airlines are unhappy, but the balance seems to be tilted in favor of the existing airlines. It's the new airlines like Vistara, which will not only have to wait to start the first international flight, but they will not be able to do so on the most lucrative routes. Back to you.
All right, Sindhu, appreciate you joining us with those details. So, has life been made easier, simpler, perhaps more complicated at the end of this? But these are only proposals. They still need to be ratified by the cabinet. Now, speaking exclusively to CNBC TV 18, the CEO of Air Asia India, Mithu Chandaliya, says his company is disappointed at the ministry's proposals. He also believes that being allowed to fly only over 6-hour flights is a big blow. Chandaliya is also not impressed with the domestic flying credit system, and aviation expert Kapil Kaul echoes his views.
I don't think it helps us in any significant way. For us to be able to get the kind of flying credits to go abroad, it's going to take us at least 2.5 years to, 2 years maybe. We need to study that. But more disappointing than that is the fact that there's a limitation on the 6-hour rule. So even after we, get significant amount of credits, I think you need something like 600 crores DFCs before we can fly anywhere within 6 hours. So that rules out the Middle East as well as the Southeast Asia for us.
Right.
We've always, from an Air Asia perspective, we've chosen routes that aren't the most popular. We've stayed away from the metro cities, and we're going to some of those destinations which are like tier 2 cities. So I think in terms of market share, I've never really looked at us going after market share. We look at building sustainable business, which will be sustainable over a significant amount of time in India.
Treat this as another piece of negative regulation. It's very complex. It has no strategic clarity, and I'm surprised that what was expected of this government, opposite is happening. We were expecting regulations to ease up. We were expecting ease of business to ease up, but what they have come up with is protective for the current carriers. It always creates so much of complexities for the new carriers. It will be difficult for government to even have the oversight that's necessary. So I'm actually very surprised and extremely disappointed.
So unhappiness there as far as the proposals being mooted by the Civil Aviation Ministry in order for new airlines to fly abroad. The government's efforts to push through the Mines and Minerals Bill is facing some hurdles. The Select Committee in its report has proposed some changes to the bill, but the Coal Mining Bill has pretty much been left unchanged. Both these bills will be taken up for a discussion in the Rajya Sabha tomorrow. Ritu joins us now with all the details. Ritu, what are the proposed changes to the MMDR bill? How serious are they?
As far as the MMDR bill goes, we understand that there will be 2 changes, and these amendments will be proposed by the government. The first amendment is that as far as mines governed by the MMDR bill of 2015, which is a proposed legislation, in that case, such mines will have to pay an amount equivalent to 1/3 of the royalty paid towards a district mineral fund. The second amendment which will be proposed by the government tomorrow is that as far as mines governed by the old act, which is the existing MMDR Act, in such cases, mines will have to pay an amount equivalent to the royalty that gets paid towards the district mineral fund. The idea is to ensure that there is development of the districts where the mining gets carried out. From what we understand after speaking to opposition parties, most of them will support MMDR bill, and it should not have any problem tomorrow when it gets it's taken up for consideration and passing in Rajya Sabha. With that, it's back to you.
Thanks, Ritu, for joining us with those details. It's pretty clear there are some headwinds for the mining bill, but the coal bill could sail through Upper House tomorrow. Anil Madhav Dave, the BJP MP, and the chief of the select panel on coal, as well as Rajiv Chandrasekhar, the independent member of the Rajya Sabha and the member of the select panel on coal, have earlier in the day spoken to Ritu Parna and assured him that they have incorporated more suggestions made by other political parties in that report, and hence no changes.
I am very much hopeful that the all political parties will support it, because eventually it is going to give money to states and from states to scheduled tribes.
Right.
Their interest should be safeguarded. If you will oppose this, it means you are opposing the scheduled tribes' right, because he is the real owner. They are the real owner because mines is in their area. So we are doing everything for them. Therefore, this is my view that all political parties, except two dissent notes Congress and CPM has given, rest other all they have given the suggestions, so they will all support us.
What the panel has recommended has made a few recommendations on labor, on protecting the interests of labor, and then talking about some other issues. The panel has not necessarily said there will be amendments to the Act. The panel has left the recommendations for the government to decide whether they'll amend the Act or amend the rules.
Also, sir, unlike the MMDR report, in this report there are, opposition members have given letters saying that they do not agree, dissent notes. Yes. Now, do you believe that that could in a way stall the passing of this key legislations at the floor of the House?
No, look, there are things in the government's policy towards mining that will find some opposition, especially from leftist members. For example, opening up of commercial mining, which in my opinion is very good for the states that own the mine, because it will get them more money. Now, there are some philosophical and ideological differences.
Well, members of the select panel there, both those bills will be taken up by the Upper House tomorrow. And speaking of coal mines, 2 blocks won by JSPL continue to hang in the balance after the government has decided to re-examine the bids. But the company remains optimistic. Ravi Uppal, the managing director and CEO of JSPL, told CNBC TV 18 that they followed a fair bidding process and they don't see any reason why there should be a re-examination of the bids. Listen in.
We have not had anything from the Ministry of Coal yet. We only know that in the recently held auction process, we were the most competitive bid for the 2 blocks, Gariparma 2 and 3, and the Tara block. But we have not heard anything from the government yet. I think we have gone through a bidding process which was very transparent, very fair. We have a huge respect for it, and I think in that bidding process, we were the most competitive bids.
Well, that's JSPL still awaiting a decision by the government. Now, speaking of the reforms drive, for the first time, the ruling government could have one of its own heading the State Finance Minister's panel on the GST. Sources say Gujarat's FM Saurabh Patel is the front runner for the job. Sapna joins us now with the details. Sapna, is this a done deal, or are we likely to see non-BJP states stage a protest?
Well, it's a democratically elected process, so that process will be followed through. It's a call of the state finance ministers, but yes, there are strong indications of the fact that the Gujarat FM is one of the top front runners for this post, and the rationale is that basically, everybody across the board may be looking for somebody who can, steer matters quickly, who can hit the ground running. There'll also be a lot of travel involved, so you need to look at such kind of candidates. Not to say that there are not others also in the fray. There are some other names also that have been doing the rounds, like for example the Kerala FM, possibly the Punjab FM, the West Bengal FM. But all indicators are towards Mr. Saurabh Patel as of now. Apart from this, we need to keep in mind that the entire body of the Empowered Committee of State Finance Ministers, that's not going to be a very long process now, in the sense that once the Constitutional Amendment Bill on GST moves forward, the state governments go ahead with that, and if the government is able to keep the April 1, 2016 timeline in place for a rollout of GST, this is going to get subsumed into the GST Council. So, down the line, as things move, the chairman EC panel, this post will get diluted. So, keeping all this in mind, it's not really a hard and fast rule that always it has to be from the opposition party. There could be a new beginning that will be made, but of course, this is a call that will be taken on 20th March, Friday, when the meeting will be held. FM is likely to head the meeting, and after that...
Now, we will have to let you go. We're out of time. Thanks very much for joining us. Is it going to be Saurabh Patel as the head of the GFC panel? He is the front runner, that's what sources are telling us. Now, the Infosys whistleblower Jack Palmer has mounted a scathing attack on Indians working in the US through the H-1B visa route. Infosys had concluded a $34 million settlement to close a case initiated by Palmer over visa fraud. Speaking to a US Senate Committee on Immigration, Palmer said, and I quote, "I cannot emphasize enough that H-1B workers that are being replaced or that are replacing US workers have minimal skills and little to no business knowledge. The idea of knowledge transfer is absurd. Americans are training these people on how to do their job," end of quote. Palmer went on to say, and I quote again, "As statistics can validate, most of these workers only have a bachelor's degree. How is this specialized talent?" End of quote. And now for more on the testimony given by Jack Palmer to the US Senate, we're joined by Shivinder Singh, the Vice President, Global Trade Development at NASSCOM. Mr. Singh, appreciate you joining us. The arguments that have been presented to the US Senate committee by Jack Palmer, the whistleblower in the Infosys visa fraud case, alleging that the H-1B visa route continues to be misused by Indian companies. How is NASSCOM going to retaliate or respond?
Well, thank you very much, Reen. Appreciate calling me in. I think we do not respond to specific issues, but in terms of company issues, but on an overall basis, as you know, the U.S. economy has become powerful economy because it has attracted and welcomed skills and talents from across the world. And the immigrants have made a huge contribution to the growth of the U.S. economy, and that's a proven fact. A few of the pointers which she has raised, does not hold any basis, because typically if you look at the high-skilled workers, and that's where we are talking about, it basically consists of the STEM workers, the science, technology, engineering, and mathematics. And they complement the U.S. workers instead of replacing U.S. workers. And if you look at some of the statistics, which goes on to very strongly show that, and various statistics, that the vacancies, the demand is far higher than what the supply is for these workers. It's kind of 1:5. And the unemployment figures is also pretty low. It's about 2.7% compared to about 5.5% overall national unemployment. So all these points surely go on to show that it's basically an issue of talent, and there is a huge talent shortage which is there in the U.S. and H-1B high-skilled workers from STEM fulfill that.
Mr. Singh, if I can also read out to you what Jack Palmer has said specifically in response to NASSCOM statements. He says, "I've read statements from NASSCOM stating that if the cap is not increased and with the current visa restrictions, the Indian economy will suffer. Let me ask the committee, what about our economy? H-1B visa workers spend a minimal amount of money in the U.S. and usually live 8 people to a room. So do you fear now that the anti-outsourcing rhetoric is going to gain ground again?"
Well, the question that you ask is twofold. One of them is the fact of the personal lifestyle, and that is something which I would not like to comment on. But in terms of the pure legal process, all our companies follow the legal process, and they apply for H-1Bs or any other kind of visa based very much on the system or the U.S. government laws. So depending on that, they are very much a part of the whole process. So hence, in terms of whether it's going to create a furor or not, obviously this is not good news because it's not a case of impacting the Indian economy. It's a case of impacting the free movement of talented people globally and impacting the laws of demand and supply. And all companies and country people are welcomed in India. As you know, there is no barrier.
Sure. In 10 seconds, Mr. Singh, is NASSCOM going to respond in any form or fashion to the arguments made in front of the Senate committee?
Well, that is something which the people have been called to respond by the Senate committee for this argument. So we have continued to evolve, and we continue to respond on an overall basis, whether it's totalization treaty where our people have to pay taxes which are not called for because they don't claim benefit of the Social Security, which is a big issue which now has been recognized that it's a concern from the US side as well. So we will continue to raise it at all the various forums which is there and raise those issues.
Well, Mr. Singh, appreciate you joining us here on India Business Hour. On that note, it is time for us to take a break. But remember, stay tuned to CNBC TV 18. 11:30 is when Janet Yellen will speak. And of course, markets watching very, very closely. For Lamar Lopez here, goodbye. Thanks for watching.